When trading, uh, one of the most important patterns is called the continuation pattern or a bull or bear flag. Let me type it out. So it's either called a continuation or a bull flag or bear flag. Now, the continuation pattern would be either a bull or a bear flag. A bull flag means the price is going up, and a bear flag, you're expecting it to go down. But the common terms are continuation pattern or more specifically, bull flag or bear flag. Giving you a chart right here of the EUR USD, I want to discuss the continuation pattern. So, in a normal trending environment, markets will go up, for example, they will retrace, they will go up again, they will retrace, they will continue higher. They also go from high, down, up, down, up, down. And these, for instance, this part right here is called the bullish flag, or here would be the bearish flag or bear flag. These are also called continuation patterns because the market moves up, forms the continuation pattern, and continues. The market goes down, forms the continuation pattern, and continues. So a continuation pattern is basically, as it says, a continuation of the trend, and that interruption right here would be the pattern. Now, we will discuss this in further videos in the Elliott wave about these particular pullbacks and moves up. But right now, I want to show you a particular pattern that you can actually start to identify on your own. So that way, make it a bit fun for you to take the information you're learning in this video and apply it. So let's take a look in what we have here. Let's say we have this here. Watch, see? Well, let's get rid of that. Let's make that another color. Let's just do it black. So market goes down, market corrects up. Continuation pattern, right? Market goes sideways. A lot of times from a sideways range, markets break out. So in the videos that we do, there's always education within the videos. So we learned just now that markets can form a sideways range, as we discussed in our prior videos, and breakouts occur. Breakout occurs to the upside and pullback, continuation pattern higher. Market corrects down, continuation pattern higher. Market sells off, continuation pattern lower. Well, that last one wasn't the best, was it? So market goes sideways again, rallies up, and continuation pattern higher. It goes here, continuation pattern higher. You can see another rally, pullback, continuation higher. So we see within the video, or within these charts, that there's these multiple patterns that that form on what they call continuation pattern. On the way up, typically called a bullish flag because it looks like a flag. Here's the pole, here's the flag. And the price data does like this and then higher. Same thing, it goes down, pole, forms the flag, and then goes lower. Essentially what you see here, same principle. Now there are other factors that come into it, but at least you're starting to see and understand that the market has waves and patterns that occur, and the best pattern that I truly love that you can apply right away is the bullish or bearish flag, that continuation pattern. You identify it, usually it comes from a breakout of a range, and that little pullback after that pullback after the pull, and the continuation higher. So my name is Christopher Terry. I hope you enjoyed the chart pattern continuation pattern video. And what's great is you can take this information that we just shared and actually just start to identify this on your own charts. Just pull some charts out and you're looking for that impulse wave, that retracement. So right here, I don't see too much yet, right? We'd like to see this come lower and then maybe something like that. All right here, market rallies up, forms a continuation pattern and continues higher. Again, my name is Christopher Terry, CEO of iMarkets Live, and in the later videos we'll discuss the MACD and how we can apply it to these patterns, but for now, just basic price patterns.